Activity on China's economic calendar will be somewhat light in the week ahead. However, investors will glean some important updates on the country's vehicle sales, industrial production, and retail trade. Retail sales in December had inched a bit higher year-on-year, underscored by increases in clothing, furniture, home appliances, and personal care, with online sales having surged nearly 24%. However, weaker domestic demand at the start of the year had weighed on China's overall economic growth, this despite some improvement in exports as trade negotiations with the U.S. showed some signs of progress. Brendan Ahern, Chief Investment Officer at KraneShares, recently pointed out that advanced technologies appear to take a front-row seat at China's latest dual sessions, including an emphasis on electric vehicles and 5G. We're fortunate to have Brendan here with us today to shed further light on that event, as well as what we may expect from China's upcoming retail sales report. Welcome, Brendan.
Pleasure to be here, Steven.
Pleasure to have you here. Thanks so much for coming. So can you just walk us through a bit what you saw at these dual sessions and what it might mean for Chinese retailers? Also, on that, what do you see coming up for Chinese retail sales in that report week ahead?
So what we saw at the dual sessions, which is the National People's Congress as well as the Chinese People's Political Consultative Conference, taking place at the same time, thus the dual sessions, it really takes the December China Economic Working Committee's proposed game plan for 2019, both the economy as well as on broader society. And the dual sessions really comes up and approves that game plan and then sets us on the path of implementing the plan. What's important for investors to understand is the emphasis on innovation, on the domestic economy, particularly raising domestic consumption, on raising adoption of 5G. In fact, during Premier Li's speech, that we actually went in and counted how many times he said the word innovative, that it was the highest number of times ever recorded. So it shows, one, that China is pushing the gas pedal on the stimulus to try to offset effects of a trade war. And where that emphasis is where we believe investors should be focused, which is around domestic consumption, which happens via retail sales, and it happens online in China. It's very different, where they're skipping over that big box retailer stage, and it's happening online. So these internet and e-commerce companies are really the transmission engines for domestic consumption in China today.
And that's where we saw that huge spike in December for online retail sales. Or, do you foresee that this will be the case in the upcoming report, or how do you see, the next batch of data coming out?
So, several years ago, we actually wrote a piece called "The Tale of Two Chinas," and it's about how China has this dual speed economy. You have traditional economic areas, if it's finance, energy, industrials, materials, has been slowing, exacerbated by the trade war. At the same time, you have the rise of domestic consumption. So for policymakers in China, they want to raise the retail sales further to try to offset weakness in other parts of the economy. And that's where parts of China are growing very, very rapidly, where other parts of China have really struggled. So a lot of the export-driven manufacturers in particular. So no different than here in the United States, right? If you go out to San Francisco, it's a boom time. And then there's parts of America that have not participated in as a rapid economic expansion as, say, San Francisco. And the same is true in China. There's parts of China that are booming right now, and there's parts of China that are slowing. And so, again, I think as investors, we really want to stay focused on what's performing the best, and without question, that's been the domestic consumption, as evidenced by strong retail sales in China. And then even more dramatically has been the pace of online retail sales. Those are growing at over 20%. So the size of China's retail sales is about the same size as here in the United States, and yet China does twice as much online as we do here.
Yeah, it's really amazing and really interesting. Looking and comparing China's retail landscape against the U.S. I'm assuming that the percentage of consumption is about the same in terms of GDP from China to the U.S. Maybe China's a little bit more. Would you say? Could you talk a little bit about how the trade negotiations may have been affecting retail sales and growth, both in the U.S. and China, or how they might compare.
So I think it's a lot of investors still feel that China is this one-dimensional, one-faceted economy focused on manufacturing, and we've seen from the PMIs, the Purchasing Managers Indices, that the manufacturing sector is under pressure due to a trade war. At the same time, they have non-manufacturing PMIs, service PMIs, which are still very much in expansion territory. And it's interesting, I actually went on Google Trends, and if you type in China manufacturing PMI, you get all these results. And within Google Trends, if you type China service PMI, 0 results. It literally says there's not enough data. So a lot of people still view China as this manufacturing, but the reality is the service sector now comprises 50% of GDP. And due to the trade war, China is trying to raise via stimuluses by cutting the VAT tax, by running a fiscal deficit, providing monetary support to the strongest part of the economy, which is domestic consumption. And that shows up via retail sales. And I think we've seen that not only from the official numbers, but then we have companies like Alibaba just a month ago reported their Q4 earnings. They grew revenue over 40%. Yeah. And so even it's showing up in the balance sheets of the companies we hold today.
Wow, it's a really changed environment, isn't it? That's great. So we're looking forward to the report coming up, and likelihood that it may stay steady, or given these stimulus measures, we may see a rise in retail sales in the week ahead.
I'm more constructive that we'll see a positive number, that we've had over the course of the last year a lot of stimulus being pushed by China, and it takes time for it to trickle down through the economy. And I think markets are rebounding. Markets are forward-looking. Economic numbers are backward-looking. So markets are anticipating an improvement. And it reminds me a lot of March of 2009, when U.S. equities bottomed. There was anticipation of the quantitative easing, all the measures being done by the government. And I think you can say that in China today, markets are anticipating all the measures that have been taking place over the last year, that it's starting to come into the economy. And I think more importantly for investors, it's showing up in these Q4 and fiscal 2018 revenue numbers.
Oh, that's awesome. That's great. Well, this has been an incredibly informative session. Thank you so much for coming. I hope you return with us. I'd love to keep going with this conversation.
Most definitely, Steven.
Thank you. That's great. Brendan, thank you so
much. Thank you very much.
Investors will be watching out for the release of China's retail sales data Wednesday, March 13th, along with reports on vehicle sales and industrial production. In the meantime, select the event calendar option in the IBKR Trader Workstation for a full list of U.S. and global economic data, corporate events and earnings, IPOs, and more. I'm Steven Levine with Interactive Brokers, asking you to enjoy the week ahead.